Welcome to another Auckland Business Chamber Business Insights webinar. It's fantastic this week to have Ian Woolford with me, and Ian has, I think, one of the best job titles I've seen in a long time, Director of Money and Cash. Director of Money and Cash, sounds good, doesn't it, at the Reserve Bank of New Zealand. And Ian's talking to us today about digital cash, something I'm sure there's quite a few preconceived views on, ideas, maybe even a bit of ignorance actually. And so Ian, it's great to talk with you. How's it going there from Wellington, I presume?
Yeah, beautiful day in Wellington, thanks. Yeah,
You can't be Wellington on a good day.
that's right.
It's said about 500,000 people.
Mm.
Hey, well, love to hear from you a bit about digital cash, where the Reserve Bank is at, and I'm sure answer a few questions that will be out there, no doubt, on this significant area.
Sure. So we're currently consulting on digital cash. This is what we're calling our CBDC, central bank digital currency, at the moment. And that consultation is running for a few months, really keen to get people to have input into it. But I thought I'd maybe start with just framing it up slightly conceptually, because one of the questions we get quite often is, well, aren't there already forms of digital cash? So we have this thing we call the money tree, and you can basically bifurcate money into digital money and physical money. Now, at the moment, the only kind of physical money there is banknotes and coins issued by the Reserve Bank. But there are digital forms of money out there already. You can also sort of further bifurcate that into privately issued digital forms of money. And further, they can be account-based or they can be token-based. Now, if it's account-based, that's the same as your deposits in your bank account, your transaction account, or what have you. And then there is the more modern form of token-based digital money. And when we talk about that, people typically think about crypto. So you're talking about, Bitcoins or maybe a stable coin. So these are all forms of private money, digital private money. But what we're really talking about is central bank digital currency, so digital currency. And again, that could be account-based or it could be token-based. We actually have an account-based form of digital central bank money at the moment, and that is in our ESAS accounts that the registered banks use. But it could also be token-based, so based on blockchain, for example. So that's just one simple way to try and arrange in your mind about the different forms of digital money. In terms of digital cash, there are a few characteristics or dimensions to think about. It's issued by the RB. The model that we're thinking about is one where it would be what we call a two-tier model. So it would be distributed by the private sector. It would be innovative and inclusive, and private and secure. Now, I'm not going to talk through this whole slide, but I do just want to make a few points because it goes to why are we doing this? One of the things I thought I'd say about issued by the Reserve Bank is that one question people ask quite often is, well, what's the difference between having a digital cash or just using my EFTPOS? Now, one key difference is that there's a difference in credit risk. This is money that's on the Reserve Bank's balance sheet. It's backed by the government. So there is a difference in credit risk. And by and large, that's not going to matter to most people, except in times when there is a crisis in confidence or people have concerns or what have you. It also acts as what we call a value anchor. And what we mean by that is that it does two things. One thing is it makes the unit, the New Zealand dollar, the same, right? So a dollar from ANZ is the same as a dollar from Westpac is the same as a dollar as a banknote or a coin. So the unit of account is the same. but it also means it can be swapped one for one from private money into central bank money. Now, the way I always describe this is people might operate entirely within a digital ecosystem, so their salary goes into their bank account. They pay at a point of sale electronically, and they never actually physically touch cash. But the one thing that people know intuitively, even if they don't think of it in these terms, is that in times of crisis or uncertainty, the first thing that people do is they want to take their money out of their bank in cash. And you see this in the real world all the time. Even in countries with deposit insurance, Northern Rock's a good example. In the UK a few years ago, long lines outside the bank. And that's in a country where there is, at the time, there was deposit insurance. So that one-for-one value anchor role of central bank money or digital cash is actually really important. Another point to make is being distributed by the private sector. So this is a two-tier model. So the Reserve Bank will own the infrastructure around the platform, but the distribution will happen through private sector entities, and that's by and large likely to be the banks because they're the biggest players in the market. But it need not be the banks; it could be some other third-party provider. And for that reason, one of the things that we're really wanting to get out of this digital cash is firstly, obviously, to give people choice about how they pay, banknotes, coins, digital cash, or private forms of money, but also to drive some innovation and efficiency in the system, because I guess in the Reserve Bank's view, we see the system as not being as innovative or efficient as it should be. It's actually relatively costly to do transactions. You're fairly limited in your product choice. What we're talking about with our product, there will be some innovation in that it's peer-to-peer, it'll work offline, etc. But really, when we talk about innovation, we're talking about private sector driving innovation. So facilitating, third-party providers or banks themselves if they want to sort of take up the innovation challenge. And through that, we hope to see more competition. And through the competition, we hope to see lower prices and basically just a more efficient sort of a system. We also talk about digital cash as being private and secure. We're putting quite a lot of thought into privacy. One question that people always ask is, well, why would I want the government looking at where I spend our money? And so, we're designing into this privacy. So the Reserve Bank will not see any of the transactions, and we'll have quite strict controls over what the third party, how they can access data as well, the third-party provider of the digital wallet or the app or however you'll access and use your digital cash. What we're trying to do there is to replicate as many of the benefits of cash. So you can use it offline in a crisis. Recent cyclone, for example, the internet was down, the power was out. ATM stopped working, people were transacting in cash. What we want to do is to make sure that digital cash will have that same kind of functionality. And I guess one other point that I'd like to make that comes up quite often is this designed to replace cash? And we're at real pains to say to people, no. We want cash to be available for as long as people want it and want the option of using it. And we know from our own research that most people do want cash there, even if they're using it less often. They want it to be there when they need it, and they want to be able to use it, when they want to. So So that's a bit of a overview, I think. I guess the final thing that to say is that we're consulting until the end of July, so really keen for the public to engage and make a submission, take our survey. It's all sort of online and pretty easy.
Fantastic. Hey, thanks very much, Ian. I'm going to ask you a few questions, probably relatively ignorant, but hopefully they are helpful, I'm sure, to me, but also to others out there. Some will be very initiated in all this and be thinking a lot about crypto and Bitcoin and all of these things. But I'm sure there'll be a bunch of business people who aren't at kind of any level. You divided things into physical and digital and on that money tree. And as you say, look, of course, at the moment, we have a very digital money thing, as it were. If I take myself, I very rarely have cash. I mean, that's a form of digital. Everything I do is sort of online or with a card.
That's right.
What then about this is, and I think I understand, but what is genuinely new about that? And I appreciate it's not quite at the design stage at the moment, but what's genuinely new about this next stage of digital cash?
Well, I think in the short term, a couple of things that are different is that sort of peer-to-peer offline functionality, but more importantly, what's new about this is giving people the choice, right, to transact in central bank money. One of the big issues that central banks are facing is as cash is getting used less, and as people are using money digitally more often, it starts to raise questions around your monetary sovereignty, your ability to operate monetary policy, for example. So we need to ensure that central bank money's around, that people have the choice to use it. But I guess one of the differences, one of the other things that central banks around the world, because everyone's looking at this, right? And it's not a question of but when. One of the things that we think will impact consumers is even if you don't choose to use Reserve Bank digital cash, the impact that it can have on innovation and cost and efficiency is something that everyone will benefit from. So in a sense, one of the things that central banks really worry about is, well, what if we had this party and no one came to the party? Well, that'd be terrible. Like, we issue a central bank digital cash, no one uses it. So they worry about that. At the other end of the spectrum, they worry about, well, what if we had a party and it was just besieged by gate crashers and far too many people wanted to use it? That might have an adverse impact on the banking system, for example. So they worry about that as well. And in a sense, it's natural if you're talking about a product to worry about these things. But I think the more important thing is, what's the impact that having generally available central bank money can have? And that impact could, we think, will be innovation, better competition, lower prices for New Zealanders, more choice, more privacy. So those are the sorts of outcomes that, even if you personally don't use cash or you personally don't use digital cash, New Zealanders as a whole should benefit.
What I've heard from you then, Ian, is what is new, if you think about it, is this is correct me if I've got this wrong, but I'm hoping if I've got it wrong, would be a genuinely new RBNZ digital currency. So it's not like what I'm doing right now when I use my cash flow. I do a digital transaction where each New Zealand dollar represents a real dollar in cash that I could draw out in theory. This is a new digital currency where I'm not going to be able to get the physical.
Well,
I could transfer it, I presume, in a trade or an exchange, if you like. But
I think it'd be easier than that. I think you could transfer it. So a couple of things. Firstly, your balance in your bank account is just a ledger entry. There is not a dollar for dollar. Banks are backed with
Yes,
capital,
sure.
etc. The government
You
stands
don't
behind.
have gold sitting at the bottom of the Reserve Bank. Some would wish you did, of course, Ian, but you don't.
We don't have gold anymore, but we do have physical banknotes and coins. So your dollar in your bank account is a claim on the institution. So that's where the credit risk comes into it. But in terms of how you could use it, it wouldn't be like a Bitcoin or through an exchange and that sort of complexity. It would be much more integrated into your digital wallet. That digital wallet could be offered by your bank. You could switch between RBNZ digital cash and your bank's cash. You could go to an ATM and get it out. So it's giving New Zealanders choice.
So in a way, it's evolutionary, not revolutionary. I mean, one of the things
That's
that's
right.
really clear, and I know I'm just saying what you've said, but because we've just emphasized, and this is not an either or, there's still physical cash, there's all those other things that would be there. The other thing I just want to draw out that I think is possibly implicit in what you're saying, but again, you feel free to give me a counter. Is this in a pragmatic sense, either competitive with certainly recognition of what's going on in terms of crypto and Bitcoin and the like? Just you give us a sense of the landscape and how this plays in with that.
That's absolutely right, and that's what's spurring central banks around the world to to move towards a digital form of currency. I referred earlier to this concept of monetary sovereignty, and that's really the ability of New Zealand and the Reserve Bank to operate monetary policy in an effective way. You see countries, and they're typically failed countries or failed states, where people lose confidence in their own domestic currency and they'll dollarize, for example. You see this in Latin America where they'll have their own domestic currency, but actually people transact in US dollars. And the thing that central banks around the world are focused on is the rise in digitalization. At this point, it's sort of more or less within borders. But if you had, a large, fintech offering currencies globally, as a country, we would lose quite a bit. Not just some identity and our relationship with our banknotes and all the rest of it, but also our ability to operate monetary policy. So these are the sorts of things that, in the abstract, New Zealanders wouldn't think about, but central banks certainly do think about, because it's important that you're operating monetary policy. You've got your interest rates tied to the needs of the domestic economy, not what's happening in some other country.
Without going down too much of a rabbit hole, I mean, it'd be just interesting your views without getting you in trouble, on the current scene, if you like, in New Zealand around crypto and Bitcoin and how that fits in currently in New Zealand. I mean, I'm completely uninitiated, or I've got pals who are, really into it. And when they talk about it, my eyes glaze over. I mean, it is a growing part of what's happening, in this country right now.
Oh, it sure is. It sure is. And quite a surprising proportion of New Zealanders have dabbled in crypto. And at the other end of the spectrum, you have the almost evangelical adherence to crypto. I guess our view of the scene, and we made a submission into select committee inquiry into crypto a couple of years ago. In our view, it's an area that will ultimately need to be regulated. And the reason why it'll need to be regulated, and this is something that's anathema to a lot in the crypto world.
Yes.
But the reason why it will need to be regulated is in order for it to become credible and for people to have confidence. When we're thinking about digital cash, we're thinking about the whole ecosystem. And if you're thinking, well, where is the innovation going to come from? It's not going to come from the banks, or at least it's not going to come from the banks in the foreseeable future. There are smart fintech companies with all sorts of functionality that can be deployed quite quickly and quite easily. But in order for them to really to have an impact, the ecosystem has, having central bank digital currency that you can back into if you're a stable coin is a good thing. Having rules that make sure that the stable coins, when they say that they're backed by another currency, are actually backed by another currency. So you need to create a minimum level of regulation, I think, in order to to provide that confidence. Now, what we said at the crypto inquiry and in a consultation we did a couple of years ago, which was called Private Innovation and Money, is our view is the sector will need to be regulated, but let's not rush into regulation. Let's try and understand it first, gather the data, monitor the sector, and think about the best way to regulate it, because regulating it like how we currently regulate banks is probably not going to make sense. It's probably going to need to be much more tailored than that, depending on how the sector evolves. So I think it's a bit of a work in progress, but and some countries go to either ends of the spectrum. They want to become a crypto center, a global center, and encourage that in with sort of no regulation. And then there are others who are trying to ban it. I don't think either of those ends of the spectrum is a very sensible place to operate in. And I think what you need is a sensible middle ground where you've got, a flourishing regulated sector that people have confidence in.
We think about the pros and cons of this. You've mentioned some of the real advantages. Choice is always good, I think. Basically, the ability to innovate, and I think about a high growth fintech sector and a bunch of things that can continue happening there. I'm sure with the evolution in areas like digital cash, I think there's a sense probably, Ian, in what you've said about, and I don't mean this in a negative way, I mean it positively, but look, not being left behind, making sure we're moving with the reality of what is happening here and now. I think if we think about the possible negatives or concerns that a small business person would potentially have, indeed households might have, and you probably heard them all, but you spoke about privacy. Now, of course, the Auckland Business Chamber doesn't at any level been quite serious about this, condone illegal behaviour. But there's a bunch of reasons why small business people will, be concerned about IRD, various other authorities, knowing where their money's gone, in a sense, well, it's digital and it's there forever. Talk to me about that. I mean, you're possibly, as a regulator, in a difficult position. You don't want to either be seen as condoning unlawful behaviour, but you also want to deal with legitimate privacy concerns in the design of this.
Well, that's right, and we are in an unusual situation. We quite often have interesting discussions with the police, for example, who have genuinely have concerns around how cash is used for illegal purposes.
Yes.
From our perspective, cash is an important piece of a country's infrastructure. It's critical infrastructure. There are genuine reasons why having privacy, well, with cash, it's anonymous. And so we don't sort of resile from that. What we're trying to do is, as I said earlier, is to replicate as much as possible in digital cash the cash benefits. Now, cash is anonymous. Any form of digital transaction is never truly anonymous. And the point that we make is the Reserve Bank will not see any of that information. And so the relationship really that anyone using digital cash has is the same as they have with a bank, in that, if there are grounds for investigation, bank accounts can be looked at. The same would be true with digital cash through the third-party provider. One point that I always think is slightly ironic is that people are comfortable in sharing all of their digital transactions with profit-making entities who like to look at the data, whereas the Reserve Bank couldn't be less interested in how many coffees you have in a given day, for example. So I get it that people say, well, it'd be money issued by the Reserve Bank. I'm worried about privacy. All we're saying is, we are very clear up front that the Reserve Bank would not get to see the individual items, nor would any other government agency, unless, just as with your current bank account, there were grounds for suspicion and the authorities needed, got court orders to look, or however they do it, to look into your details.
Yeah, I think a second concern would be, and you may say, Simon, don't be jumping at shadows, but I think it would be one that would be quite strong out there in certain segments of society that, okay, well, you say, Ian, that this is going to be not an either or, there'll still be cash, but really this is part of an informal phasing out of hard cash. And, we think about your post bank and your bank scenarios where over time, they've got rid of more and more machines and banks and so on. I mean, would people be, they've got a valid concern there if they think that this is going to see the phasing out of the real physical stuff?
Well, at every turn, we go to great lengths to say that is not what we want to do. And in fact, the challenges that the cash system is having has nothing to do with the Reserve Bank. It's much more to do with, there is an element of people choosing not to use cash.
Yes.
That much, right? Because they prefer the transacting digitally. But there is also, so you could say, well, that's a demand phenomena. But I think there's also a supply phenomena where it is getting harder and harder to access cash because, over the last 20 years in the lower North Island, bank branches have halved.
Yes.
Right? And the South Island is down by about 40-ish%. Upper North Island, similar. ATM numbers have decreased. So it's getting harder to access cash. So we are doing a lot of work, what we call our cash system redesign. And actually just last week, we opened up, we sent a press statement out. We are running cash trials around the country. We've invited rural towns between 1,000 and 10,000 population to give expressions of interest. The Reserve Bank is going to fund cash infrastructure going back into these towns where they've lost their banks and ATMs. And we're looking at the role of retailers as a way of moving cash around. One interesting little thing, a little factoid based on our research, about a third of where people get their money from currently is through a retailer, usually with cash out.
Yeah.
However, retailers pay about 75% of the costs of the entire cash system. So what's happened is there's been a real transfer directly and indirectly onto retailers, the burden of accepting and giving out cash. And then quite naturally, because people respond to incentives, some retailers are saying, well, this is all getting a bit hard. If I have to get in my car and drive 4 hours to do the banking and I'm a sole trader, that's all getting too hard. So what we are doing over the next couple of years, we'll be running these cash trials where we put infrastructure back into towns that the banks have withdrawn from, and we'll be paying retailers to give cash out, even without a transaction, even without a purchase. So basically compensate them for the work that they're doing in supporting the cash system. And that's all designed to understand the economics of it and to do the policy work on who should pay for what. So we are bending over backwards trying to make sure that the cash system is available for people that want to use it. And we know from our own research that most people want the cash system to be available to them. And we want it to be available for as long as people want it to be available. So, we can say it over and over. People immediately do go to this. This is just trying to get rid of cash, but that is not where we're coming from.
Good to hear that assurance. And boy, it is, it's a very interesting subject, that issue around the retailers and the increased burden on them in this
Yep.
area, and what it probably means in a wider commercial and economic sense. I won't ask you more about it, but it's a very interesting issue. I think it's hard to get past the fact that we're talking money. One of the most important things, I think, if we think about it for people in a practical everyday sense. In terms of this digital cash, I'm right to say, aren't I, Ian, the Reserve Bank's already issued an issues paper, that we're now in the sort of design of options phase for feedback, and then you're going to go to sort of more designing the prototypes for an introduction potentially around 2030. Does that sound about right?
Yep, that's exactly right. That's the game plan at this point. There'll be much more public consultation to come, though. So you're right. We did an issues paper saying, "Hey, here's this thing called digital cash," or we called it central bank digital currency at the time. This is saying, here's how it might look and how people might use it. And that's important because it gives not just the public, but it gives entities like the banks a deeper understanding of where we're coming from. And they can say, well, if that's how you're going to design it, well, this is what we think about it. So it makes it a little bit more concrete for them. We're doing a lot of work behind the scenes about what it would mean for financial stability, what it would mean for monetary policy, interoperability within existing payment systems, how retailers would use it. So there's lots and lots of additional work that will be rolled out for consultation in due course between now and 2030. And of course, for something as important as this is a government decision. This is not something that the Reserve Bank can just start putting out there. So there will be lots of opportunities for business, consumers, New Zealanders to have input.
Fantastic. And I think, really at this point in time, in addition to getting better informed and thinking about these things, an important point is, if you've got strong views out there, you can have your say. I know when I looked, you can just type in RBNZ and it's there on your front page, digital cash pretty prominently, or certainly if you put an RBNZ digital cash, that'll get you there as well. I don't know, Ian, if there's any parting thoughts you've got, but can I just say, it's not every day I talk to the Director of Money and Cash. I think that's how my family sees me some days, but there's no pay that comes with it. But yeah, anything else you'd sort of like to get across, you think we haven't covered?
Not that we haven't covered, but just to reinforce, cash is here to stay, and we want people to engage in the digital cash discussion. So look forward to lots of submissions.
Really appreciate it, Ian. Thanks so much. As I say, Ian Woolford, Reserve Bank of New Zealand.